Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance that is now turned support. Now, as the market is testing previous resistance turn support, we could expect more potential bullish continuation and for the market to potentially reject this strong support level to the upside. We can also notice that as we have an impulse and a correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market went and tested exactly the 50% retracement, which was in fact lining up precisely with this previous resistance turn support, creating a confluence of support at this level, which we could in fact expect this market to reject to the upside. So also here on the monthly, everything looks quite bullish. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, we can notice how this area is very strong previous weekly support, turn resistance here, again here, and again here, which now that the market has broken it to the upside, is once again turned support at this level. As the market is testing this previous resistance turn support, we could expect bullish continuation to the upside away from this area, because this is a quite important level which has been respected by this market very precisely. Now, if we go down on the daily time frame, what do we see? Now, from a daily perspective, first of all, I did speak about USDJPY quite a few times in the past. I spoke about it when the market was here, I explained all the reasons for which we could expect this rejection to the upside, and in fact, that is exactly what the market gave us. And then from here, I made another breakdown explaining all the reasons for which we could expect first this correction, and then more bullish continuation, which again is exactly what the market is currently giving us. And by the way, I will link in description these two previous analysis, actually these three previous analysis, so you can go and check them out for more free education. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what institutions, so the big players in this market are doing, and we check the data precisely for the JPY, what we can see is that with the last reports, net positions have overall been decreased in the short term, but in the long term, we had a massive decrease. In fact, we went from minus 20k all the way down to minus 90k net positions. Now, this is more than 4 times a decrease of the net positioning on the JPY. This essentially means that institutions have been moving to the bearish side of the JPY, and a move to the bearish side of the JPY means a move to the bullish side for USDJPY, because a weakening JPY that gets shorted by institutions makes USDJPY stronger. The reason being is that all currencies on the spot are traded against the USD. So if you're checking the data for the JPY, you're actually already checking JPY USD. And in fact, we can see how in the long run, USDJPY has been pushing to the upside aggressively, fueled by this institutional shorting of the JPY. So this means that the move to the upside we would like to see is quite probable, considering that institutions are currently still moving to the bearish side of the JPY. So moving back to the technical side of this market, what we can see is that at the moment the market is rejecting this previous daily resistance, which is now turned support. We can also notice that, in generally speaking, we have an impulse and a correction, and after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the market is currently testing exactly that zone in between the 0.618 and 0.786 of the Fibonacci taken on this impulse leg, which is a quite strong support level that we could expect this market to potentially reject to the upside. Now, in a situation like this, where clearly we have strong support, the monthly, weekly, and daily look quite bullish, and the CO2 data is also aligned to the bullish side, it seems like we have a decent probability of seeing a potential move higher. So how we could be approaching this potential move higher? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading session software, which puts together everything you need as a trader all in one interface. And if you scroll over here past the testimonials, you will see that at the moment there is a massive special promotion, which gives you access to the mentorship program with a big upfront discount from $497 all the way down to only $97 one-time payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund of the mentorship program directly credited back into your trading account. And if you scroll over, you will see that directly from here, there is still time to join before the offer expires and everything goes back to normal. And here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. The link is also in the description and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.